Good morning, guys. Um, I wanted to change it up today. I actually want to look at some execution. Normally we look at like 2023 mentorship, some concepts. I just want to see what ICT has been cooking up here. So we'll take a look. We'll actually take a look at this one. Right, so um, what he's looking at is we had a sweep of time-based liquidity right here. So that's going to be Tuesday daily low. You could see that we have these straight buy side liquidity, and when we have flat edges, we want to make them jagged. So we're going to want to cut through these. So once you have that major point of liquidity swept, you can see we also on the 5-minute we have the fair value gap right here supporting price. So it's not just like a turtle soup, but we're trading inside that macro for that manipulation macro, sweeping this low right here to that 5-minute fair value gap. Because I'm not sure if he actually has audio on this one. We'll just check it out though. Crazy. He's on the 15-second. I'll just skip through here. Something I like about ICT is he doesn't rush his stop placement. Like most of the time, he actually has some kind of risk on, which is a good thing.
Dr. Krev is genuinely sorry.
Some things I'm seeing right here is obviously continued order flow. It's pointing out the minor buy side, but you could see it's coming back down kind of into a discount right here. You have a fair value gap, you have that volume void. We're likely to come off of that and continue further. Skip through here. It's a chop. Have a breaker. Kind of this double-sided volume void right here. And then the order block. It's almost like a unicorn. Alright, so we hit that minor buy side right here. Pretty reasonable to see that pullback. But obviously, looking at our overall bias right here, we're most likely to continue to those highs. All right, so first partial off. Looks like he is targeting this initial high. Crazy how clean this market is right here. Just tagging that fair value gap and leaving. Now I'm looking at, will this become an inversion fair value gap, including this fair value gap? You see right there, came up above it, it's supporting price. We're likely to just run through that now. Yeah, it was pretty sick. I guess we still have more targets. It's a 1 minute chart now. Kind of see that stair stepping all the way up. Something ICT likes to do is he'll like partial off inside of PD arrays, like as soon as they enter them. You see right here, he's kind of considering it. So he actually placed a protective partial right here. So if price comes back, it's gonna take 4 off. Or sorry, 3 off. And this fair value gap presumably should hold price. Okay, so it took 3 off. Wix did the damage right here. You could see that body is still respecting it. So still expecting that to go further. And so that's why he's putting another protective partial right here. Because it makes sense that it should continue.
They reduced penalties for criminals.
Come on, I'm getting some propaganda right here. Now you could see prices kind of trading through fair value gaps on this side right here. So this would become IFEG. Not sure exactly what he has marked out over here, but it looks like it's also supporting price to continue. So he's aiming for that new day opening gap right here. Considering what the macro might do, he placed his stop loss right here. Enough so that I could come back and sweep, but still likely to see that continuation. Honestly, a pretty perfect setup right here. You have not sure what happened there. You have these stacked highs right here, and then that IFEG. Technically, you could actually re-enter into that right now as a trade. It's likely to continue. There we go. I'll go back to see. See that exit. Yeah, I mean, so if you missed this entire move, could have definitely entered on this macro right here. After that sweep, you could see that clear respect right here. That body is really telling the story. Once you see that close above this fair value gap, you could enter targeting these highs and this new day opening gap. Looks like he has one more partial. One more runner at least. Yeah, I think he gets stopped right there. Yeah, there we go. Just exits as soon as he sees that rejection off of that new day opening gap. Likely to trade lower off of that. So yeah, I just thought I'd take a quick look at one of his executions. See if... Look at another turtle soup.
A Taco Bell taco filled with...
Can't be eating this garbage, okay? I think this is the same trade. Take a look at this 1 minute chart, kind of right around that 8:30 mark, so we're likely to see some kind of volatility. Entered off that fair value gap respect. You can see the bodies clearly respecting it. Looks like we're coming off of a market maker sell model right here. Kind of that breaker pattern with the smart money reversal coming lower. So he's targeting daily low and sell side liquidity. So a low a day, kind of a major liquidity point. He's just pyramiding into those entries. When you have a market maker sell model, buy model, it's a lot easier to get that order flow going and just add into it. Kind of like what he's doing right now. ES is really nice for that. These continuation moves, because NASDAQ is very like it could have a lot of spikes. So when you're trying to add in and like maintain your risk, it could be a little bit more risky. Yeah, he kept it really simple, but he had some type of major sell side over here that once we're already down here, we're likely to just continue off of that. It's the last leg of our sell model right there. Mark, did you have anything to say?
I was just thinking of doing a price action review for the week.
Oh, okay.
So if you're done, I'm gonna start it up.
Yeah, you could go ahead, and I'll just share that on my side.
Okay. Stream should be working now. Can I see my screen?
Yeah.
Okay. Let's go over NASDAQ first. I did mention this IFEG in the start of the week. I just wanted to go over TGIF as well. It is a Friday. So IFEG, right? As soon as we started from Friday, We already closed last week over this daily bearish fair value gap. And yeah, right away you don't know whether it's going to be a bullish confluence because it could always pull back whenever and close. But going into the first day, Monday, we obviously tapped into it, but pulled back and closed above. Same thing for the second day. And we got a really bullish move right here, which nearly hit our target at the start of the week, which was just this buy side. Right? But the fact that we didn't hit it and it also closed bullish like this next week. The reason why, like I did say that it could sweep this low, but I think that the reason why it didn't is because of this bullish for rally gap. So every time that it was pulling back, it was already filling a bunch of like inefficiency right here, buy side inefficiency. So it didn't need to pull back all the way to fill it or to like take this liquidity because it was already getting so much liquidity from this fair value gap. And when we ran, we obviously swept the liquidity. We had a huge bullish move, and now hopping into the lower time frame, you can see that from like Thursday's range, we already started pulling back. On the weekly candle like this, TGIF is basically a pullback from the highest point of the week to Friday wanting to close around the 0.2 and 0.3. So on Fibonacci, this is the 0.2 and 0.3, right? So this is the case only when a market is moving in one side, like the majority of the week. It's moving in one side, and then from Thursday, like midnight to Friday, you kind of expect a little bit of a pullback of the weekly range. So that's kind of what we got from Thursday, and you can see that Friday's kind of now staying within this range. Right, we already got the pullback, and now we're just consolidating within the range. The week has already created like everything that it wanted to do. It swept the liquidity. It used the IFEG right here, and it filled this fair value gap. So overall, the objective of the week is already done, and I'm not expecting any more like volatility here. As for gold,
can I mention one last thing?
yeah,
So the reason why we moved on Thursday, we had major sentiment change on Wednesday. We had FOMC, we had Federate, we had a 5-point cut, a 50-point cut, which is pretty crazy, considering that we haven't had a cut in over like a few years. Because we've been just raising rates consistently over and over. Since like 22, we had some pretty much 0, and we went all the way up to 5.5. And the reason why it's so like beneficial for indices, we're likely to see all-time highs because there's going to be more borrowing. Tech companies, especially, they like to borrow. So Thursday we had a interesting day where Asia session and London session expanded, and even New York expanded higher, which you don't see, but you can see there's a lot of manipulation. That sentiment change really played overnight. So really you could have caught a move in any of the sessions, but it's just interesting to see how a news event can affect price action. So yeah, you can see off of that just overnight, just all day grinding up.
You can see that when it's like one-sided price action, it typically just uses the nearest fair value gap during the session. So whichever one is the like appears the highest on the highest time frame, that's the one that it will reference. Yeah, you always want to keep track of like your news. Say Monday, for example, a lot of consolidation, price action. You don't want to put a lot of money in Monday because if you blow your account Monday, you won't have the opportunity to trade the rest of the week, right? Everyone's always excited to trade Monday because market obviously opens up after being closed for a while. Look at this range. So let's say you're going for scalps in this range, right? You try to buy, random sell side move. You try to sell, random buy side move, and it's just staying within this range, and you can't exactly put a direction on where price action is going. The only way to trade this profitably would be to like consider the higher time frame objective and trade with a big stop loss. That way you don't really care what's going on the lower time frame and you can just let it ride. So yeah, the move did happen Friday, and then it was from the IFAG. That was just your confluence. The actual like reasoning would be the news. Same thing on gold, right? We got all of this buy side once again. So obviously this month, I was expecting bearishness, but obviously because of this news, it kind of changes things, especially because even with this month being bearish, we still got these huge moves on buy side. Like that already disrespects the seasonal tendency. So what happened here is price action closed, like the daily candles closed below this bullish fair value gap, and I was expecting them to fill this one a little deeper, but from news we just started running on buy side and created all-time highs again. You can see that during every session, just like I showed on NQ, it just kind of treats the nearest fair value gap that was created on the highest time frame as the reasoning for continuing the move. So when there's extreme bullish like conditions, you kind of just like watch the first fair value gap that it actually taps into. Right here once again, right? We're running. This wasn't actually the first one. There's a fair value gap right there. But we tapped into this big fair value gap, nearly filled it to the midpoint, and continued higher. New York. We obviously got some buy side here. There was no news today, so let's see. This happened at 8:30. Same time though. That news normally occurs at 8:30. We got a reversal. Tapped back into this fair value gap and continued its move. Sometimes on no news, you can go to the orange folder news and just kind of like check to make sure there's nothing too strong. Like this FOMC, for example, you had this at 11:30 and 2 p.m. So you can't expect that at these times you might get some sort of volatility just like this, right? Just so it's not random, this news still does exist. It's just not strong and we don't exactly avoid it. It's possible to trade that news. That's kind of it for this week. You just kind of want to react. Like obviously I was bearish in the start of this month, and now I'm just kind of letting price action develop so that it can actually tell me whether we're going to continue on buy side or whether we're going to sell. We need a lot more confirmation to actually start selling because we're only bullish right now. There's a long way for NQ to go if it's going for all-time highs. There's these equal highs right here. So next week, we just kind of got to keep an eye on, like, I guess the highest inefficiency right here on this weekly time frame. Because ES already traded into it and swept its high. So you can see that it already swept the high. Now we're just going to see if NASDAQ also wants to sweep that high or if it's just going to run into this inefficiency and then both of them are going to reverse with an NQ and ES divergence, right? So if NQ ends up closing within the midpoint or somewhere within this fair value gap and start reversing without sweeping this high, technically ES already swept the high and we can actually expect it to start running lower. But yeah, that's what we're kind of looking for. This is definitely going to be a draw on liquidity. Whether there's going to be sell side, who knows? But buy side's definitely a option for aiming for this weekly inefficiency, this bearish fair value gap. That's going to be all for this review. These are the two pairs that I've been trading and keeping my eye on. TGF on gold. So same thing, right? Weekly range. You find it from the bottom to the top of the weekly candle. Let's go to the GC1. So we have TGIF, right? The 0.2 and 0.3 is where it's likely to pull back. Gold is still running on buy side, so it still has an opportunity to pull back and close within this 0.2 or 0.3. But basically, it's not about where the daily candle or the weekly candle actually closes. It's just about like pulling back on Friday, because you can see that a lot of the previous weekly candles, actually on gold, it does pull back most of the time. But there are still like examples of it closing without running to the 0.2 or 0.3, or like without closing in the 0.2 or 0.3. That doesn't mean it didn't actually do it. You can already see that on the lower time frame. We got the pullback into that kind of range. So even right now, if it wants to pull back, you're just looking for confirmation. Like if there's a disrespected inefficiency like this, for example, let's say this is the high. You're not automatically trying to sell and catch the high of the weekly range because it could continue going up. There's still a few hours until market closes, which you want to do. And the only like time you actually start looking for this 0.2 or 0.3 is, say for example, you have equal lows. Okay, right here we have a clear target. Next thing, we have this inefficiency, and we also have this liquidity that was swept. So now if market starts running back down and it closes below this fair value gap and becomes an IFEG, you can expect that market's likely to draw to the 0.2 or 0.3, so it's a valid target to aim for the equal lows. But you'd obviously need confirmation, because if you're just trying to sell from the top of the weekly range, it can just like say this, you thought this was the top, it can just easily run back up. Yeah, so TGIF is kind of like your initial confluence, then you want to pair it with all the other stuff. Yeah, I guess you can start looking at it from like midnight on Thursday, because that's already Friday's range. And if you are looking for a TGIF, you kind of stay on the daily time frame and look at where it would actually pull back to, if there's something clear. ICT also has a pretty detailed video on TGIF, but the best way to learn is just from experience, because every pair does something a little differently, and it's just about kind of adapting to price action. And no matter what the pair is, if you pair it with a fair value gap and some liquidity with a clear target, you're most likely going to hit the trade profitably. Any other questions? This is what I was talking about, by the way. It's a little bigger on the weekly. Okay, no, it's not. This was something I marked out in one of our earlier weekly analysis. Let me pull that up. Okay, so obviously we were still bullish during this month, and I was expecting it to run on this high. We did end up getting this target, which was our main draw on liquidity, as I mentioned right there. And what I was aiming for on NQ on the weekly time frame was it to actually run to this fair value gap, which is the one that I have outlined right here, right? And this is the exact level. Let's see where that was exactly. Yeah, right here. So this was this close, right? Monday's open. That's when I did the analysis, and we have Tuesday's range right here. Tuesday's candle did run to the lower time frame target, but we didn't get this fair value gap right here, which is like fine. Like obviously, you can't just move in one side and keep going. but now we have this order block right here. So it's a little more obvious that if it does close above with this like new kind of bullish fundamental news, we can continue higher. We can use maybe a fair value gap that gets created in between these two legs and continue higher. That's going to be all for this analysis. If there's no more questions, thanks for hopping in. Thanks, Christian, for covering for me. I was going to do the call, but I just went to take a shower first. Technically, nobody would have joined until I sent out the announcement.
Yeah, thank you guys for stopping by.